discussing about capital losses and how does one deal with it when one is actually filing one's income tax. How does it pan out? Actually, this presentation has been inspired by a question which has come to us recently from one of our viewers, that's Mr. P.B. Mohan, who's saying that is it necessary to show capital losses if you're not being able to adjust it in a financial year? If so, where to show it? So he wants us to cover that. It's in response to a previous presentation we had done on capital losses. We'll be giving him the answer and some more information related to capital losses, but that's going to happen in just a little while. Welcome back. Welcome to Fund to Money. We are discussing about capital losses, and as I mentioned, that this is in response to a question from one of our viewers, Mr. P.V. Mohan, who wanted to know that if you cannot adjust your capital losses in a particular year, do you need to show it, and if so, where? Now, here's our answer. We obviously would strongly recommend that you show it. Why? Because you're allowed to carry forward your capital losses for 8 consecutive financial years. So what you can do is subsequent sort of capital gains can be offset against this capital loss. Till you exhaust this capital loss, you can keep getting advantage. So subsequently, the gains that you make, you will be able to preserve them. They're going to help you augment your income, right? Now remember, short-term capital loss that you make can only be offset with short-term capital gain. So that, just remember this is the limitation. Apart from that, long-term capital loss can be offset with short-term capital gain and long-term capital gain. So this is a fundamental thing that one needs to keep in mind. Now, also important in this discussion, that's the reason we said we're going to expand it a little more, is that you need to know that depending on the investment, especially the asset class, your definition of short-term or capital gains happens and you get taxed accordingly. So if you have invested in an equity or equity-related investment like equity oriented mutual fund, then what happens is for investments which are less than 1 year, you pay and you sell off that investment and you exit, you make a capital gain, you pay 15% on the capital gain, that's short-term capital gain. You pay a short-term capital gains tax, that's 15%. More than 1 year, it's a long-term capital gain, you pay a capital gains tax of 10% for gains above 1 lakh. For every other category, so be it debt, be it real estate or gold, it's a very simple thing. For investments of less than 3 years, you basically the capital gains gets added to your income and it gets taxed according to your tax slab. For more than 3 years, as we have mentioned in many of our presentations, what happens is the capital gains gets adjusted. It gets adjusted downwards at the rate of the increase in inflation. The inflation indexation, it is called. The rate at which inflation went up, that's the rate, that's the proportion in which the capital gains comes down for taxable purposes. And then the second advantage is you get taxed at 20%. So these are some of the things that you need to keep in mind. So subsequently, what happens is you benefit by carrying it forward. You have to mention all this in the description or disclosure wherever you're making for income under capital gains, that you have got 5 heads of income for taxation purposes. So income under capital gains, that's when you need to describe this or disclose this. We hope you found this useful. If you found this useful, please hit the like button, share it, get connected with us on all leading social media networks, and wait for our next presentation. Till the next time, take very good care of yourself and goodbye.